to technology infrastructure in the UK. At one point, Trump even joked about AI and NVIDIA CEO Jensen Huang, who was in the audience.
We're taking the next logical step with a historic agreement on science and technology partnerships, and this will create new government, academic, and private sector cooperation in areas such as AI, which is taking over the world. I'm looking at you guys. You're taking over the world, Jensen. I don't know what you're doing here. I hope you're right. All I can say is we both hope you're right.
Well, for its part, NVIDIA says it plans to invest $2.7 billion to support the UK's artificial intelligence industry in partnership with several VC firms. Huang says he plans to invest in autonomous vehicle tech developers Wave and Oxa, as well as the fintech company Revolut and several AI startups. But back in New York, of course, the big story was Intel shares that soared after NVIDIA agreed to invest $5 billion in the chip maker. That's really a surprise move that's going to see the two firms co-develop chips for PCs and data centres. Let's get on now with our Bloomberg Tech co-anchor Ed Ludlow, who has the details for us. And Ed, of course, you were at that press conference today with Jensen and Lip-Bu Tan as well, going through the deals of this partnership. I think we saw the reaction in Intel. But what exactly is at stake for both companies, and what are they going to get out of this partnership?
Yeah, I think, for Intel, this is the biggest move on the stock since 1987, and the word historic was thrown around a lot, and it is historic, right? These are two names in literally Valley that are at the origin of the Silicon Valley story in Intel's case, a relative newcomer in NVIDIA's case, where the world order's just different present day, right? NVIDIA leads the world and Intel has fallen behind. Their HQs are 1 mile apart and split by a freeway. So the first question on everyone's mind at this press conference was, what role did the administration and President Trump play in this arrangement? The answer is none at all. Listen to this.
The two technology teams have been discussing and architecting solutions now for probably coming up to a year. The two architecture teams, well, it's three architecture teams, are working across, of course, the CPU architecture as well as product lines for server and PCs. And so the architecture work is fairly extensive. And the teams are really excited about the new architecture. And so the teams have been working a while, and we're excited about the announcement today.
Quickly, if they had been working on this for more than a year, that would predate Lip-Bu Tan's tenure as CEO of Intel, and it would predate the closer relationship that the president has established with Jensen Huang, although Huang did say that he assumes the administration is supportive of this arrangement.
Yeah, we can't forget that the U.S. government's stake in Intel has now soared with this 20+% gain in the share price, right?
Yes.
But what do we know about Intel's business, because it has continued to lose market share, and how could this help?
It has continued to lose market share, but the mechanics of how this is going to work is really important. x86, which is the architecture that Intel designs its CPUs, are still commonplace in data center. To this point, NVIDIA puts the GPUs into data centers in the form of literally server designs. And they've been focused on ARM-based designs. Now they're going to also do Intel. And the way that Huang explained it to my question to him is that it's simple. You just swap in the Intel-based CPU. But it goes back to the discussion on, well, why are they also doing an equity stake? And the explanation on that was, well, if we believe that these products we're working on addressable market for both NVIDIA and Intel, not just in data center, but in PC as well, where Intel provides the CPU component and NVIDIA the GPU or graphics component, then of course we're going to do an equity investment, because we will see a return on the success of the strategy that they're both pursuing.
Yeah, of course, Lip-Bu Tan really at the start of what's going to be a very long turnaround effort for the company. But also interesting to track in the session the shares of AMD and the pressure they saw, because what does this mean for them? Yeah,
I wish we had hours to talk about this, because in the history of Silicon Valley, all of three of these names have jostled for position. So when NVIDIA is partnering with Intel on PC, that is going directly after something that AMD has a slight lead on with against NVIDIA in that space, in the sort of system on a chip domain. And so it's completely not a surprise that AMD fell. ARM also fell significantly, right? Because I just told you that NVIDIA's also now going to do Intel-based CPU. Historically, it's been focused on ARM-based CPU, and in the press conference, Huang said, by the way, we're still doing ARM-based CPUs, and the stock paired its decline. So because NVIDIA leads the world in these markets, you know, the market was trying to decipher in real time, like, who's does this mean for the status quo and where these chips are going? And I think we're still asking that question today, and we will tomorrow.
Latlo, good to have you with us. Bloomberg Tech co-anchor there with the latest on the Intel and NVIDIA. And coming up on the Asia Trade, JP Morgan Securities joins us to look ahead to the BOJ's rate decision due in a few hours. Amova Asset Management explains why they believe CPI risks in Japan support a rate hike by year-end. Plus, CSIS will be with us as we examine what could come out of that phone call between President Trump and Chinese President Xi Jinping. Much more ahead. This is Bloomberg.
According to an IBM survey of over 2,000 CEOs worldwide, only 25% of their AI initiatives are delivering their expected ROI. As Client Zero, AI is an incredible opportunity for us to really reimagine how we run the IBM operations, to really bring to life AI across every area of our company. In the past 2 years, we've delivered a significant ROI. If we can do it for IBM, we can absolutely do it for any client in any industry.
A lot of my time was just spent
all employee and manager interactions with HR.
To keep its benchmark rate unchanged at today's policy meeting. All 50 economists surveyed by Bloomberg say borrowing costs will stay at 0.5%. Let's bring in Bloomberg senior Japan economist Taro Kimura. Taro, so we're not expecting any change on the benchmark rate. So what will you be watching?
So basically, I'll be watching how Governor Ueda will signal about towards the next rate hike, the timing. My bet, I think it's still a viable timing, but at the same time, given the political uncertainty, we are not sure who's going to be the next prime minister. And actually, the two leading candidates, Koizumi and Takaichi, has a totally different view, probably on the Bank of Japan policy. So the Bank of Japan is still wait and see mode. But at the same time, I think he will the door open for October rate hike, probably stressing out the progress of U.S.-Japan trade deal.
So then, Tara, what are you going to be listening out for in the call in particular? What's the tone that you're going to be most listening for?
Right. I think the Ueda's going to sound mixed in a way that, although I believe he will stress, as I said, the positive side from the U.S.-Japan trade agreement, I think he won't update his view on inflation, although I think we're going to having a latest print in 20 minutes, 15 minutes. It's going to stay hot above BOJ's 2% target, but I don't think he will steer clear about his assessment on inflation in order to avoid looking hawkish. Important thing for Ueda is he needs to keep current yen's level against the dollar, because still the latest the yen's level, although it's strengthened year to date, but still weak for exporters, and it's important for Japanese exporters who need to deal with elevated U.S. tariffs. So I think basically Ueda is going to send both dovish and hawkish signal. I think a little bit tilt towards hawkish in my view, but still sugar-coated with many dovish comments.
Is that because we have seen a stronger economic data print, not only on the inflation data that we're expecting today? What's been the economic backdrop so far?
Exactly. I think in a vacuum, I think Japan's economy is really solid despite the elevated U.S. tariffs. As you know, GDP print was good. I expect the production won't be wreaked havoc by the U.S. tariffs because of the yen's weakness. So therefore, in a vacuum of inflation and economy, the BOJ is ready to pair stimulus, but they want to see the timing which is politically conducive for them to pull the trigger.
That was our senior Japan economist at Bloomberg Economics there, Taro Kimura, talking about the BOJ decision, very much expected to stand pat today. But the BOE, of course, the Bank of England, has also kept interest rates unchanged at 4% and cast doubts over the prospect of more this year. Policymakers say future cuts will be gradual and careful, citing concerns over resurgence in inflation. Traders don't expect any further easing this year and are only fully pricing in one more quarter-point reduction by the end of 2026.
So I think the sensible thing is that we've been on hold today. We'll see how the news unfolds in the period to come. I mean, I continue to think that there will be some further reductions, but I think the timing and scale of those is more uncertain now.
Well, let's take a look at the snapshot of markets on Wall Street overnight. This is something we haven't seen going all the way back to 2021, and actually something we've only seen a handful of times this century. But essentially the S&P 500, the NASDAQ, the Russell 2000s, the Dow Jones, all of those soared to all-time highs in unison. Really can't underscore how rare that is, but let's discuss the moves now with our MLive strategist, Mark Cranfield, joining us. So, Mark, I mean, should this sound the alarm bells at all, just given you've just seemed to have that optimism continuing in equity markets?
I think it's a pretty interesting reaction. Yesterday there were some reports suggesting that Jerome Powell was hawkish in his press conference after the FOMC decision. It doesn't look as though the US stock market thinks he was hawkish at all. They seem to think that he was pretty dovish. It's a testament to the signalling which we've seen this week is that the Federal Reserve cut interest rates. They pretty much promised there will be a few more interest rate cuts to come. The US economy is doing extremely well. The GDP numbers have generally been on the positive side in recent data. Although the jobs market is slowing a bit, it's not disastrous. Companies are earning lots of money. The AI story still seems to be generating a lot of excitement. We've just had NVIDIA investing money in Intel. Can you imagine that happened years ago? So the signaling for the moment is still that there's momentum. People want to get involved. Coming up towards the end of the quarter as well, it's not the kind of time when portfolio managers will want to be showing that they have less exposure to the United States, if anything more. So for the very near term, it looks as though the stock market in America is pretty well supported. And given the outlook on interest rates, it can probably run at least through towards the end of the year. Whether this is a bubble or not, as Ellen Greenspan used to like to say, we'll only know afterwards. But certainly valuations are very stretched. But they've been stretched for quite a while. And still nobody is giving up on the idea. So it's probably got a bit further to run.
And also the moves in the Treasury space seems pretty interesting. I mean, the 10-year yield, the biggest intraday gain since July or so. really caught between that idea of further easing, but also we continue to see solid data.
I think if you look at what's happening with Treasury yields, nothing moves in a straight line. But if you look back over the past few months, yields are gradually grinding lower in the United States, and they'll probably continue to do so. We've had the curve has been flipping around, but it's probably steepened enough. And it won't be too long before people start looking for a grab for long-term yield. If they can still catch 4% somewhere or slightly higher, they're probably going to go for it because corporate yields are coming down dramatically. The spreads between corporates and treasuries are getting tighter and tighter. And that, in fact, will work